Hi everyone, this is Ali Hussein Kasim of Ali Talks Tech. In this week's weekly roundup of tech news across Africa, I'm covering three interesting stories, probably four. The first one is an interesting development. Well, it's not really a development because these players have really gotten into the crypto stablecoin space, and I'm here speaking about Visa and MasterCard. So specifically, Visa has announced its product focused on the creator economy and basically just saying that they've integrated their Visa Direct platform with stablecoins. Now, for those who may not understand what stablecoins are, these are just crypto coins that are backed one-to-one by gold. So this is USDC, that's one of them. USDT is another one. And what Visa is simply saying is this: when you've done that gig, your bank doesn't need to tell you, oh, T minus 2 or T plus 1 or T plus 2, which basically means when your money is sent today, you have to wait for 2 days or 3 days, sometimes even 4 days. I'm not kidding you guys. In this day and age, 2025, money is sent and old rails through, I shall not mention any brands here, but old rails through correspondence banking and all that stuff and end of day manenos. You send money after 3 p.m. You're told, no, this day doesn't count. You have to wait until tomorrow and stuff like that. So basically what Visa Direct has done with stablecoins is you do a gig, somebody's New York, money is sent, you get it through your wallet within seconds or minutes maximum. This is an interesting game changer because velocity of money in this space is super, super important. So Visa has launched this product and it's quite interesting. Now, if you want to look at how Visa is starting to play in this market, in the last couple of years, what Visa has been able to do is within this Visa Direct platform, through crypto, sending money through with crypto, $140 billion. And this is only going to grow. Now, we're starting to see very interesting interplay. There was a time when regulated and established players in financial services would tell you, hey, man, this crypto thing is a passing cloud. There's nothing going on here. Now, everyone and his grandmother and grandfather in the financial services sector globally is starting to say we need a digital asset strategy. This space is going to be interesting, will continue to be interesting. Back home in Kenya, the virtual asset service providers bill has been passed. We're just waiting for the licensing protocols from the Capital Markets Authority and the Central Bank of Kenya to kick off. Interesting times. My next story is on the years-long fight between drivers and ride-hailing businesses in Kenya. So in Kenya, you have ride-hailing businesses like Uber, Bolt, and Little, which is a local ride-hailing. The drivers have always had an issue about pricing. The platforms basically have a unilateral, strong play around saying this is how we price, this is your commission, and take it or leave it. Some of these players used to charge up to 35% commission. And the pricing per kilometer is something that they basically decide. The drivers have fought this. They've gone on strike, they have gone to the government, but finally we are starting to see these drivers really organizing under an organization they put together, Digital Drivers Association or something like that. They have petitioned the government of Kenya until the government of Kenya has written to this ride hailing and given them 7 days to come back with a response. And the driver is simply saying this: implement the Automobile Association of Kenya's per kilometer rate. This will have the effect of potentially increasing prices between 40 to 50% and removing the power of pricing from the platforms to basically the government saying you need to follow the AA of Kenya pricing or per kilometer rate. Now, this raises some very interesting questions and puts these ride-hailing companies in a conundrum. On one hand, so first let's speak about the concept of multi-sided marketplaces. On one hand, you have the suppliers, and these are the drivers who come with the vehicles. On the other hand, you have the platform owners, the Ubers and the Bolts of this world. In the middle, you have the customers and you have other suppliers like the petrol stations, oil, and stuff like that. Hence, the term multi-sided marketplaces. Now, the platforms have had huge power, continue to do have huge power and deep pockets through venture funding in the billions of dollars. These drivers have been forced, literally, to toe the line. And now they are saying, you know what, guys, enough is enough. So, in the next couple of weeks, we are going to see very interesting play within the ride-hailing business. Now, on a personal note, I've been having these conversations with Uber drivers every time I have an opportunity with them. I'm speaking to them and I'm like, guys, don't you have a choice? We have a choice, Ali, but you have Little, you have Bolt, you have Uber, and you have, I think, Farasi, and you have Wasili, a couple of other local plays that is coming into play and starting to slowly but surely start to move the power away from the platforms to the drivers. And the drivers are becoming a little bit more savvy in terms of how they deal with these platforms through strikes, through petitioning the government, and so on and so forth. This story is still in play. And in the next couple of weeks, we are going to see how that pans out. And this could actually be a blueprint what other African countries would do when it comes to this platform play in ride-hailing businesses. And not just ride-hailing, because you have deliveries and so on and so forth. My next story is on the latest Nigerian bank to announce its entry into Kenya, Zenith Bank. Zenith Bank of Nigeria, the second largest bank in Nigeria in terms of assets, has announced an acquisition of Paramount Bank, which is a tier 3 bank in Kenya. This brings to the number of Nigerian banks in Kenya, will bring it to about 4. You've got UBA, you've got GT Bank, you've got Access Bank. Zenith is coming in. What's making the Kenyan banking sector interesting at this point in time? I mean, let's admit it. Kenya's banking sector is I would say financial services sector, because that includes fintechs, is pretty advanced. In Africa, you've got 4 or 5 key fintech markets: Nigeria, Kenya, Ghana, Egypt, and South Africa. And financial services, when it comes to incumbents, Kenya is also among the top 5. Now, there's a perfect storm that has been brewing in the last 1 year. The central bank announced an increase of the capital base of these banks, minimum $10 billion. Now, you have a number of banks that may not be able to raise this by the deadline that the central bank has announced a couple of years from now. And we're already starting to see Paramount Bank being one of them by with the acquisition. And we have probably 5 to 7 others. My prediction is that in the next 2 to 3 years, you're going to see at least 5 to 7 bank mergers or acquisitions in Nairobi. This is interesting for me because we're going to start seeing a consolidation. We're going to start seeing a further increase in digital transformation of a lot of these banks. Interesting times for the financial services sector in Kenya. The Zenith Bank is projected to close sometime in the first or second quarter of 2026. My last story of this week is on the SIPS report that just came out by African Nenda. We are talking about instant inclusive payment systems in Africa. And African Nenda just announced the SIPS report. They were launching it in Eswatini this time. And we are starting to see an important transformation of national payment systems in Africa. We have a number of instant payment plays that is already happening, about 19 more that are in development. And we are at the precipice of starting to see an integration of these national payment systems into the Pan-African Payment Settlement System, PAPS in other ways, in another name. And you have about 31 countries with 36 live instant payment systems, according to this new SIPS report that was just launched last week. These platforms have processed 64.6 billion transactions in 2024, amounting to about $1.98 trillion. I love to see a more African currency as opposed to just dollars, but I guess that's another story for another day. Now, there's also another one major milestone. The Nigerian NIPS instant payment system has become the first Pan-African IPS instant payment system to achieve maturity, which includes basically inclusivity. When you're talking about inclusivity, you're talking about banks, you're talking about fintechs, you're talking about microfinance. And a couple of weeks ago, they tested the first payment directly between a bank and a fintech. This is a major milestone, and we are going to see this drive across Africa. My hope and prayer is that we are going to see within the next 2 to 3 years, majority of African national payment systems to become instant and inclusive. Looking forward to catching up with you guys next week. Asanteni sana.